So, welcome everybody to this week's episode of the Financial Freedom for Physicians podcast. And I'm the host, Dr. Christopher Liu. And as you know, I promote four types of freedom on this podcast. So, first is financial, second is time, location, and emotional freedom. And I bring on guests that are doing cutting edge, innovative work outside of the box against the traditional medicine grain. And so today we have a very special guest, Dr. Bala, and she is going to talk to us about financial freedom and how she achieved financial freedom by the age of 41. So today's talk is going to be all about finances, freedom, one of my favorite subjects. I love the topic of financial freedom, physician finances. So I'm going to bring up her bio and so Dr. Bala is a radiologist. She's a mother. She's a real estate investor and mentor who helps high income professionals achieve financial freedom through real estate investing. So she did her residency at UMDNJ and fellowship at the Carol Baldwin Breast Center at SUNY in Stony Brook. So she's been a huge advocate for women's health in her role as co-section chief of breast imaging at Staten Island University, and now she's in private practice in Bakersfield, California. Dr. Ball is also a personal finance and real estate investing blogger and mentor who achieved financial independence at 41, primarily through passive income from her multi-million dollar portfolio of long and short-term real estate rentals in the United States and abroad. She's on a mission to help others get from trapped to financially free through her blog, social media, communities, and her course, Generating Freedom Through Real Estate Investing. So you can find her on generationalwealth.md.com. And without much ado, Dr. Bala, welcome.
Thank you for having me, Chris. I'm so excited to be here. Just wanted to start off by talking about my journey. I'm a radiologist in California, as you mentioned, and I started practicing almost 11 years ago. And I did the traditional thing. I maxed out my 401, did the backdoor Roth IRA. I was investing in brokerage accounts, got a couple of rentals along the way. I thought I had it figured out. And 2019 was a transition year for me because there was a merger at work. The terms of the contract changed. It wasn't something that was acceptable to me, and I decided to transition to a different employer. It was a rough transition, especially because I had little kids, and it was just more. It was rougher than I expected it to be, but it really got me thinking about financial independence. I felt like most physicians, most high-income professionals, we are shackled by golden handcuffs. We get used to a certain lifestyle. We're making a lot of money, but it doesn't mean we're investing wisely or we're saving a lot necessarily. And I did feel trapped. And then 2020, the pandemic hit, and I'm sure that affected a lot of us because it was just unexpected, right? Work wasn't what it was, what we weren't used to. There was more uncertainty. So just the combination of everything really made me introspect and look at my financial independence numbers. I started understanding that better, looking at it more closely, and I had the fortune of having a couple of rentals and my stock portfolio, right? So I looked at that, and that was my aha moment. I had a third of my money invested in real estate, and it was giving me twice as much once you factored in the cash flow and the equity buildup that I could tap into. And that was like, for me, that was the moment where I realized that I had to be investing more wisely, because all of us think about, we save more, we earn more, and we think that may be the path to financial independence, but it's not, as you know. I think investing wisely is the key component over there, and that just shifted my journey. I started focusing on building my portfolio, growing it rapidly, acquiring more long-term rentals, short-term rentals. I did a BRRRR, which is, buy a property, rehab it, force appreciation, tap into that equity, and then rent it out. I did a lot of things to optimize my returns from real estate, and that's how early this year, I hit my financial independence numbers. And I know now that there can be no transition at work that is ever going to cause me the same anxiety, because I'm at the point where just cash flow from my portfolio is going to meet all my family's expenses indefinitely, which is a nice place to be. And as you were saying, you talk financial freedom, but I feel like financial freedom also gives me that time freedom, location freedom, where I can work from anywhere. And I mean, necessarily be anywhere and still have that money coming in, and then the emotional freedom that comes with it. So yeah, so it was a profound year for me. It was a great journey for me. Just knowing that having that knowledge makes that huge difference, because looking back, I realized that if I had known 11 years ago when I started out as an attending what I know today, it would have made a huge difference. And I probably would have hit my financial independence numbers at 35. And that's what started me. That's when I realized I wanted to talk more about it, because I was talking to all my friends and I felt like I wanted to have a greater impact and reach more people. So I started off with mentoring this community of professional women from across the country on a social media platform, WhatsApp. It just started growing organically from there. They wanted their spouses included. And then I just, included more people in the group. The community started growing. I was doing Q&As, webinars, and just talking to people about it. But there came a point when I realized that for true transformation to occur in their lives, there had to be something more structured. And that's where Generational Wealth MD came into place. I started it was initially a course, then transitioned into a coaching program. And I helped people over an 8-week period understand everything about real estate that I think is going to give them that head start and help them optimize returns so that they can actually accelerate towards financial independence and achieve, get to the point where they take complete control of their lives and they can practice medicine any way they want to, on their own terms, live the life that they want. And that's where I am right now.
That's such a inspiring story. So, we come from some of the same mindsets, and what I want the listeners to get away with is, so what are some of the challenges that physicians have, particularly when it comes to financial freedom? Because everybody thinks, once you're an attending or a doctor, you're set, and that's actually not the reality. So to tell, so I'm trying to get this out into the masses. So what are some of why do doctors struggle so much in finances?
Before I talk about the challenges, Chris, I want to talk about two physicians who really what they're doing right now really inspires me to keep going every day. So one physician I know commutes 4 hours each day, so 2 hours each way to get to work and come back. And it's not even a job that they're completely satisfied in. And to me, for a physician who's worked so hard to get to where they are, to still have to not be able to practice medicine on their terms, to just to have to work a job where they're not completely satisfied because they feel that they have no choice. I think that's really sad. I have another friend who's a mom to 2 twins who are 2 years old, and she travels out of the city every week. So 1 week she's away from the kids because that's the only job that fits her criteria that she's able to find at this time. And all of them feel trapped. And as you said, we think high income means more money, more freedom, but it doesn't necessarily mean that, because there's lifestyle creep. So the more we earn, what essentially happens is that the lifestyle we led as residents is likely not what we're leaving as attending. So we live in high cost of living areas. Sometimes we have the doctor house with the doctor car and all the expenses that come with it. And so you're not necessarily even saving more, or you may be saving some, but it's not going to get you to that financial independence number anytime soon. And you're going to be working decades and probably won't be able to retire before you're 60. So lifestyle creep is big. And then there's also the bait that some jobs give you, like especially with the VA or some other positions where they give you the benefits, right? So you're working essentially because you think, okay, I have the benefits. And then there's also sometimes the allure of having a pension or additional benefits in retirement that makes you work till you're 58 or 65. And you almost feel like that's the only way to do it. So I think those are two big things, that the part of the golden handcuff part of that. But then there's also the way we invest. And most of us do the traditional route, which is the stock market. But what I realized, or you save and you think you're going to save yourself to retirement, which is not going to happen essentially. When I was at that point in 2019, I looked and even with $500,000 in my bank account, that was going to last me 5 years if my financial independence number was $100,000. And if you have a portfolio, and you know this, Chris, but just for everyone who's listening, when you're withdrawing from a stock portfolio in retirement, you have a safe withdrawal rate, which means if you want that portfolio to last you anywhere from 30 to 50 years, which is what your nest egg should be doing, you're only able to safely withdraw around 4%. And that factors in your asset allocation and retirement and inflation numbers. So when you're left with that 4%, what it essentially means that to have $100,000 in retirement that you're able to withdraw annually, your portfolio needs to be close to $2.5 million. And that's a big number. And that's going to take you time if you're going to save towards that. Meanwhile, with real estate, you have cash flow, and then you also have the equity buildup. And once you factor all of that in, I mean, just looking at cash flow, you have a 12%, if you're optimizing your returns, a 12% cash flow, that is what you need. And so you're going to, with maybe anywhere from $500,000 to $1 million that you invest in real estate, you're going to get that same return. And so I think the reason, the bigger reasons are that we have lifestyle creep, and we're primarily investing in the stock market, and our asset allocation is not optimal, which is why we're trapped, because then we need to get that 25x number, so 25 times your annual expenses before you can even consider retiring. And then there's also the mindset, right, Chris? A lot of us think that that's just what you do. You work till you're 65, and that's just how it's done. And you have to wake up every morning and go into work. And if you don't like your job, you find another job. But that's just the way you do it. It was eye-opening for me. And I just hope that everyone else realizes there's a different way to do it. You don't have to do it the traditional way. And that's where I think podcasts like yours are really having a huge impact, because you're talking to so many physicians who are doing it differently, right? Some of them are earning differently, they're adding to their income by having additional multiple sources of income. And then there are the people who are investing very differently, where you can still be passive. And I think that's what I like about investing, more optimally, is where you can, even with real estate, and I do direct ownership, but I keep my portfolio super passive because I invest primarily out of state and I have property managers, and I am shifting to more active portfolio. But I want people to know that you can keep your portfolio super passive and still have those significantly higher returns, where you feel like, you could be spending a couple of hours a month and still get anywhere from $5,000 to $10,000 in post-tax dollars every month to spend, for your expenses. So I think that's key to realize that there's so many different ways of doing it.
So for the listeners, what Dr. Bala was mentioning is different forms of real estate. And in her course, she'll talk about, in her mentoring and coaching, she'll talk about the advantages and disadvantage of real estate. But real estate is one of the best vehicles for physicians for generating wealth, taking your cash, your active earned income, and transitioning it into passive income so you can get your freedom. So, and then what Dr. Bala is talking about is active versus passive real estate. So in the form of syndicates and real estate funds. So I know you have a lot of, so tell us, like, for example, so real estate, what are some of the and you talked a lot about the advantages. What are some of the challenges that physicians face when trying to get into real estate? I have a lot of physicians, they're like, oh, I'm interested in real estate, but how do I get in? I live in San Francisco or New York City, and I can't get in, so tell us some of the challenges.
I think the first biggest roadblock is the mindset, right, Chris? Because when they think about real estate, it's something that they have no idea how to get started. The first step is the hardest, and so then all your limiting beliefs come into play. Of the biggest limiting beliefs I've heard physicians say is that I don't have the time for it, and then the other thing is I don't have the money, or it's too risky, and I don't have the knowledge. I think those are the four biggest limiting beliefs. So we'll just break those down. When it comes to time, just like I was saying before, but you can do real estate in so many different ways. You can be super passive and you can be ultra active, and people do it more actively because you have significant tax savings. You can actually shelter most of your clinical income just because you're investing in real estate. And that's a huge bonus for some people. And so that's what makes them be super active. But I find that, you can be super passive with real estate. And I think that's what most people need to understand, because when I was investing in real estate for the first 8 years, the first 6-7 years, I was only spending, and I was doing direct ownership. I owned my rentals out of state. I had a property manager manage them. I only spent, I would say, an hour a month, but just to be safe, averaging everything out over the year, a couple of hours a month to be able to generate that $2,000 in post-tax dollars that was coming, which is more than I can do as a physician, yeah, even in a high-income specialty such as radiology. So I think that's one thing to realize. When I grew my portfolio to what it is right now within the last year during the pandemic, to hit my financial independence numbers, I was raising 2 kids, working a full-time job as a radiologist, and raising a 3-year, at that time, a 2 and a 5-year-old. And so it's definitely possible if you find the right systems to do it. I think real estate can be super passive. So what the biggest objection is time, and I think that's the limiting belief that we need to overcome. And just talking to people who've done it, I think, is the biggest way to realize that it can be done and it's easy. Then the other one is money, and you would think that physicians have access to a large amount of money when putting down a down payment of $30,000 is not going to be a big deal. But what I've come to realize is that for some people it can be a big deal just because of their lifestyle or their income or other circumstances. And that's where I say, well, if money is an issue, then you should be investing in real estate, because then the stock market, the traditional way, is just going to take you that much longer. Because with real estate, you have leverage, which really helps you scale rapidly. And I think the other big thing is forcing appreciation, which is where you can take a property within a short period of time. You can do things to the property to increase the value of the property significantly, and then tap back into that money and pull your money out completely. So you have little to no money left in the deal. And I don't think that's possible with the traditional route, which is why I think if money is a big challenge, then you should be investing in real estate, which is what I tell people. And then the thing that people think, the next thing is risk, right? Okay, so real estate investing is risky. I don't know what I'm doing. And so am I going to be able to do this right? And that's where, again, they call it alternate investments. And that's because most of your financial advisors are not allowed to talk about real estate. It's just part of the way their training is. But that doesn't mean that real estate is risky. If you ask me, real estate is really low risk compared to the stock market. And I'm a very conservative investor. I'm an index fund investor. So you know how boring I am. And I do the same thing with my real estate. I like a super conservative portfolio. And that's what I try to teach even in the program, is that you can have a real estate portfolio that is based on your goals and your risk appetite. You can have something that's super risky, which gives you a higher reward, higher returns. Or you could keep it super passive, super conservative like me. I like to do class A minus and B properties, which means those are higher end properties where I'm not, my tenant base is a better tenant pool, and I'm not dealing with people where I have to deal with evictions or people who don't pay up. So you could do that. I do residential real estate is very conservative, and you know that, Chris. You can pick what you want to do and keep your portfolio super risk free, and so that's definitely possible. And even comparing the stock market and real estate, I just find that real estate is, in my opinion, is more risk averse. It's more to the liking of those people who like to be conservative, like me, because even when the stock market crashes and you have all that uncertainty with it, if you look at rents, traditionally, even during the downturn, the last downturn in 2008, the home prices dropped significantly, but the rents, national average rents, if you look at those graphs, those stayed pretty standard, maybe a tiny bit of a dip for a little bit, but that was about it. And that's as risk-free as you can get. So I think getting over that limiting belief that real estate is risky is really important. Yeah, and so I think those are the big limiting beliefs that stop people. And then the last thing as well, and I hear a lot of people say this, it's like, I don't know enough to start investing in real estate, and so I'm going to make mistakes. And that's where I say, for this time, the time right now is like an amazing time. You have all these podcasts like yours, Chris, people who write articles, and I've read a lot of your articles on Kevin MD. You have blogs, you have courses. Depending on where you are and how much support you need, you have so much available to you, where it took me 11 years since I became an attending to get to this point, even though I had a mentor, early on, and he introduced me to a great team. But it doesn't have to take anyone who's thinking about this right now that long. I say it can take you decades to learn about it, and you can learn from your own mistakes, or you can learn it in days. My program is an 8-week program. There are so many resources out there where you can really rapidly learn and educate yourself and get to the point where you can start tapping into the magic of real estate. So it doesn't need the lack of knowledge doesn't need to be a limiting belief anymore.
Mm-hmm. You've dropped so many gems, and we'll have to have you back on in the future as another guest or as a masterclass or webinar. So
Let's do that.
Yeah, for all the listeners out there, there's more to what Dr. Bala is saying. This is just the tip of the iceberg. So if they wanted to learn more from you or get in contact with you, how would they do that?
So the best way is the website, generationalwealthmd.com. So I have the blog on there. I have additional resources, replays of the master classes I've done in the past. I always think that's a great way to get started. And then there's obviously the contact section where you can reach out to me and get in touch with me. We also have a Facebook group by the same name, Generational Wealth MD. It's primarily for physicians and other high-income professionals. Most of them are looking to get started, but it's also for those people who have a few rentals and want to scale rapidly. It's a great community. I always say the three things that you need are mindset, mentorship, and mastery. Mastery is the education part. Mentorship is also part of your team. You have a great mentor who's going to help you build that team. But then mindset is super important. That's why the community comes into play. So there are all these resources that anyone can tap into.
You've touched so many on mindset, and especially mentorship. Mentorship is huge. You find somebody that's doing what you're doing and is successful, and learn from them and replicate it. So Dr. Bala, before we part, what are your final words for our guests?
Yeah, and this is what I tell a lot of people, because oftentimes it's like, well, I want to do it, but I'm not ready. And I think the biggest thing is you don't have to be ready to say yes. And you don't have to be without fear to take the first step. Oftentimes we're just jumping into things with that fear, just knowing that that's just the way you do it. You don't get any returns for investments you haven't made. So you don't have to be ready. Just say yes, just get started, just start learning, just reach out and take that first step. I think that's important. And the one more thing I wanted to say is, when people look at real estate, they say, oh, I should have done it in 2010 or 2012. And I'm sure, well, I felt it a lot. I don't know if you felt that, Chris. I feel that a lot, but everyone just brings me back saying, it's like the Chinese proverb, which you probably heard. The best time to plant a tree was 20 years ago. The second best time is now. It's the same for real estate. Yes, that would have been awesome, but this is the second best time. And it still is a very exciting time, I think, to be investing in real estate, just with, with interest rates that are, I think, and inflation, the way things are headed, with the way the real estate market is right now. I think it's a great time. And if anyone's thinking about it, this is the best time to get started.
Awesome. Yeah, real estate is how I got my financial freedom. I know, and then definitely reach out to Dr. Bala for her resources, and we'll see you on the next episode. So thanks so much for being on the show, and thanks so much for giving your knowledge and your wisdom. And we look forward to having you in the future.
Thank you, Chris. I had so much fun.